Good afternoon, everyone. This is Oghoorian with ACap Advisors and Accountants. Thank you for joining us for another webinar series where we talk about very specific subjects on whether if it's expanding your business, investments, taxes. And today we have a really special treat. We have Ryan Roques from Mission Valley Bank. He's going to tell us everything we want to know about SBA lending, small business administration lending. And most of you who typically listen to our webinars know me as Ara from ACap Advisors and Accountants, but today I'm actually wearing two hats. Not only am I with ACap Advisors and Accountants, but I'm also on the board of directors of Mission Valley Bank. And Mission Valley Bank is a small business lender here in the LA area, and we focus really on high quality customer service for our clients, primarily business owners. And Ryan Roques is one of our main business development lenders, and he's going to talk really in depth about, as I mentioned, SBA loans. Ryan's got a really great background. Ryan, I'm sure I'm not going to do it justice, but when the time comes, please give us a quick background about yourself, and let me just talk about some ground rules for the presentation. But I want to circle back to kind of what your, the different skill sets you bring to the table for your clients. Before we get started, I want to point out that this webinar is being recorded, and you can see it and hear it later on our website at here shown acapam.com/webinar. If you have questions, please submit them right below where it says Q&A. We promise we're going to get to all the questions at the end. And not only that, we're going to be posting this webinar onto our social media platform, not only with ACAP, but also Mission Valley Bank. And through there, if you have questions, you can also ask them. And we will also have all of our contact information on the slides where you can reach out to us as well. So that being said, before we kind of get started on the roadmap, Ryan, I'd really love you to kind of just give us a background about yourself and how you got started in banking, and just fill in the picture for us.
Thank you, Ara. Appreciate it. I've been in banking, the lending industry, for approximately 15 years or so. I've worked for several different lenders, over 5 in a lot of different areas. I've done your hard money lending, just under your, just what's considered under your hard money lending, your conventional loans, and I really took a liking to SBA because it was more personalized. It seemed to have more flexibility, and it was really, you really got to get involved with the borrowers and their business and their plans and their dreams. And I really felt like it was a really great asset to business owners. So I stuck with SBA lending. I've been doing that for several years now, and I really love it, and I'm thankful to be here talking about it and discussing it with you today.
Well, that's a great introduction, Ryan, but I think you're missing one small nugget of information that I think most people are going to want to know about. Tell us about your experience at UCLA and what you did there.
Well, I was fortunate enough to get a scholarship to football scholarship to UCLA. I also played football and baseball there. I was very, very thankful. We had some good years there. I went from '98 to 2000. I got to go to the College World Series of baseball and the Rose Bowl within about a year of each other. So I used to play with Cade McNown, Troy Gloss, Eric Valent. Yeah, it was a great experience. And after that, a short run with the 49ers, and now I do SBA loans. So
that's a fantastic transition. So isn't that typically the route? Okay, well, I didn't mean to throw you off track there, but I think it was definitely important for our listeners to know kind of a little more about your background, not only professionally, but your academic background, and your sports background as well. So, okay, the floor is yours. Please, go ahead.
Okay, as we go to the roadmap, we'll go over the target audience. What is an SBA loan? Who qualifies? That's very important. A lot of people are unaware of that when asking about SBA loans. The benefits, obviously, what are the standard terms, and then we'll go over some examples towards the end. So, all right. Now, for the target audience, it will be current small business owners wanting capital to grow. Now, this could be as simple as adding employees or updating equipment to where it may be more profitable for them with the upgrades, and they feel like it would make the business more profitable. Very common use. Small business owners wanting capital to expand. Now, this could be physically expanding their current property, improvements to the current location. They may want to widen their geographical footprint with new locations. Very common use and considered a very, very good loan. Small business owners wanting capital to buy out their partners. It doesn't really matter the percentage that you own. If you want to buy out your partner and be 100% owner, very common use. Individuals wanting capital to start their own business. Now, this could include, when you say start your own business, it's not necessarily someone that just has an idea and they're, just sitting on the couch and saying, hey, you know what, I should start my own business. No, this includes a lot of managers or GMs that are currently working at a business, and oftentimes the owner wants to hand it over to someone that they know can still successfully run the business. So they want to sell it to the manager or the GM. And these are very, very good loans, very common loans. It's not really considered someone that just all of a sudden wants to start up their own business. It's considered someone that has a lot of experience in the industry and actually at the subject business to get involved with. And a lot of lenders are very comfortable with this. As we move on to what is an SBA 7A loan, it is a government guaranteed loan program to assist small business owners. Now, honestly, a lot of people, when they hear SBA, it sounds intimidating. They think it's like saying the DMV or you're going for some kind of grant or something like that. That's not the case. This is really here to assist, and this is why I got involved in this program. Some people, it's not the same program that it was, say, 10 years or so ago, where people were kind of associated SBA loans with loans that are difficult to acquire. I've honestly closed an SBA loan within 24 days. So it is really here to assist, and I do believe it's one of the best programs out there for small business owners. The government guarantees 75% of the loan amount up to $5 million for lenders. Now, this is $5 million per individual, so they do that by your Social Security number. Do keep in mind that it's not fully guaranteed, so it is there is 25% portion that the bank is still liable for, and is still a risk associated with the loan. So it's not a loan that is 100% guaranteed regardless of the repayment ability of the borrower. It does, however, help reduce the risk for lenders, which is always a good thing. Lenders are just able to get more comfortable considering the fact that they have a government guarantee behind it if something should go wrong. So the lenders are more motivated to make these loans. Moving along, the SBA loans are considered good loans for both the borrowers and the lenders. This is a win-win. It's one of the best, in my opinion, one of the best loans there is out there for small business owners, but it's also considered very good loans for the banks. So the banks love to make these loans, and the borrowers are oftentimes able to increase their cash flow or finally get the property that they've been dreaming about, and it's really a win-win. The bank is very happy when these loans go through, and so are the borrowers. Coming to some of the uses of the SBA loans, you can use them for business acquisitions, franchises, your franchise restaurants or pet shops. They're all over the place. Almost anything that you can think of, it's a franchise. It most likely qualifies for an SBA loan. Medical, dental, veterinarian practices, gas stations. There are very few limitations to the uses of an SBA loan. One of the limitations that I can think of offhand is if the majority of the income of the borrower is derived from gambling. That does not qualify. That is one of the limitations that they do have. It can be used for working capital, equipment loans, improvements to property. These are very common forms, buying things in bulk. However, there is no, they do not allow cash out for borrowers. So you cannot cash out on a building or property or even get reimbursed for money that you have spent. So the way around that is to simply, if you're going to spend money and you need to spend it right away prior to getting an SBA loan, put it on a credit card or take out a loan to get it, because just like the next line says, for the sources and uses, it can be used to refinance business debt. So if you put it on a business credit card or you get a loan to get something done that you need done right away, the SBA loan can be used to refinance that debt. However, it cannot be used if you used your own cash and then you want cash back into your pocket to just have it there. That it cannot be used for that. It can be used to refinance high interest rate credit cards, equipment loans, short-term leases. These are very common uses of the SBA loan, very good uses, and considered very good loans. I've seen the lengthening of short-term loans, primarily lease loans, are usually in your 5-year range. I've seen business owners increase their cash flow by $20,000 from day one, $20,000 a month from day one when the loan closes, by simply refinancing their lease loans from 5-year terms to 10-year terms. So needless to say, they were very excited about that. Now, it can also be used for the purchasing of commercial real estate. So offices, retail buildings, warehouses, self-storage, assisted living facilities, mobile home parks, hotels. Most likely whatever you can think of, if your own business is being operated out of it, or you are trying to purchase a business to where it's being operated out of a current facility. In my experiences, 95, 98% of the time it qualifies. Like I said, there are some limitations when it is associated with gambling, but there are, often days to where I've never actually heard of the business before, but it's in this building and they want to purchase the building, and they have a unique business that they have inside of it that does qualify in most cases. Like we said, who qualifies? A lot of people have these questions on if they themselves qualify for an SBA loan. There is nothing tricky about this. In most cases, when a person was looking for financing for their own business, they qualified. Most business owners qualify regardless of your percentage of ownership. So some people believe that they needed to be a certain percentage in the business in order to qualify for an SBA loan. This is not true. You can be 2% owner of a business and you will still qualify for an SBA loan. I've actually done a loan for an SBA loan to where an individual was 1% owner of a business, and it may be a business to where no one is over 2% owner. You can qualify. Any individual owning 20% or more of the business must serve as a guarantor. Now, there are no exceptions to this. If a person is 20% or more owner of the business or the borrowing entity, they must serve as a guarantor. They must provide a personal guarantee. And moving on to the next one, individuals owning less than 20% do not have to guarantee the loan. Now, this is very good. Make sure you listen to this, because this can be used to the borrower's benefit. When you are structuring a new business and you're partnering up, you may want to put the people that are financially strong or have the good credit or so as your 20% or more owners of that entity. And if someone is, say, contributing and you do not want their financials or the merit of the loan being based off these individuals, you would simply put them as less than 20% owner of the entity or the business, and they would not, the loan would not need to be qualified off the merit of those individuals. The other thing is that the $5 million limit per social security number does not count towards someone that is not a guarantor on the loan. So if they're not a personal guarantor, then they still have their entire $5 million limit to use for the SBA program. So those that maybe have really big aspirations, they can use that to their advantage, and they say, okay, well, you're going to be less than 20% owner on these specific ventures. However, when we move on, we'll be out of SBA funds for this social security number, so you'll serve as 20% or more owner on these other ventures. Individuals starting new businesses. Once again, this can be your managers, your GMs. You do not have to currently own a business in order to qualify for an SBA loan. You can actually file for an LLC during the process. You simply put, oh, who's the borrower? And they put TBD. And they go, well, what does that mean? That means to be determined. We don't even know what the name of our business is going to be yet. However, we want to purchase this. We want to get it started. And that's perfectly fine. You can actually file while you're in the process of getting the loan. Like I said, the SBA program is there to assist small business owners, and they do realize that, you know, it takes time, and everyone may need a little assistance. They may not have everything together from the very beginning of the loan process or the procedure. The property must be, if you're dealing with the property must be occupied 51% or more by the borrower. Now, there are no exceptions when it comes to this. This is must be done, and there's no way around it. However, it's very simple. If you're purchasing a property that has 2 units, they're not really going to come in and check the square footage and do of that nature. If you let them know that you're going to occupy the larger unit, that's fine. There's 2 units, you know, our business is going to be in the larger unit. Perfect. That qualifies. The other good thing about that is that if the other unit is actually receiving rental income from another business or individual, that income can actually be used as income for your business. So that income can count towards your overall income to qualify you for a larger loan amount. So a lot of people do like that aspect. Moving on to the benefits of an SBA loan, which is why we're all here. SBA allows for higher loan to cost than most other loans. It truly does. And that is, I would say, probably the #1 reason why people want to get SBA loans rather than different loans, is that the lower injection amount that they have to put in is really attractive. However, the cash flow must qualify. So if you're purchasing a property, you know, for $1 million, you're not automatically going to qualify. There has to be a business there, or your income has to qualify for that higher amount. So for the 85-90% loan to value or loan to cost, if the business or the global cash flow qualifies, yes, that's very common for an SBA loan. 10 to 15% down as compared to 25 to 40% for conventional loans. This is very common, and most of the loans, SBA loans that I've done, have fallen in the range of your 10 to 15% injection.
Hey, can I ask you a question about that?
Yes.
Can that 10 to 15% be borrowed? Can it be outside funds?
It can be borrowed. However, most lenders want the borrower to inject at least a minimum of 10% of their own funds. They want to see that the borrower has some skin in the game.
Okay.
But yes, that can be borrowed, and it's with the seller carry, and that is quite common. That's quite common. So very, very good question. It does have very favorable amortization terms, 10 years for equipment and business acquisitions. This is without the real estate. So if you're not acquiring a building and you want equipment or a business that is renting a building, the loan term will be amortized over 10 years. If you're actually acquiring real estate, the building, it can be amortized over 25 years. These oftentimes people use the equipment loans that are out there, 5-year terms. They use the SBA 10-year term, and they find that even if they took a higher rate for the SBA 10-year term, they still were able to decrease or increase their cash flow on a monthly basis with the longer amortization terms. So people really like to use those longer amortization terms to increase cash flow. The 25-year amortization term for the real estate is pretty common among conventional as well. However, the SBA does allow you to mix the term. So if you have a combination of both, and the SBA does allow you to mix the term and say, well, it's partial real estate and it's partial equipment or just the business, so you can put it at a 17-year term or a 19-year term. So borrowers do love that, and it's a very good tool for them to use to increase cash flow. It also is fully amortized, so no balloon payments. You get the full term of the loan to pay the loan. This is very good because it reduces the pressure. You can sleep better at night, knowing that you don't have to refinance in another 2 years or so, which make it difficult to say you take a bridge loan out and that's a balloon payment and you only have a 1.5 to 2 years to stabilize the property or get financials that are going to allow a lender to get comfortable with the takeout of that. With the SBA loan, you have the full term to stabilize the business and the cash flow and get the financials matching up with the takeout. And if you feel like there's a better deal out there, you can go ahead and take it. But if you don't, if you like the terms that you have with the SBA or you're perfectly happy with it, you can keep it throughout the full term. We go to the speaking of terms, as we go through the next slide, the terms, and these are very common, usually 1.5 to 2.75% over prime, depending on the risk associated with the loan. Now, this would be referring to things like cash flow. Is the cash flow there from the beginning of the loan, or is the borrower going to have to go off projections to where we say, okay, we're going to start off slow, but we're projected to make this by the end of the year and do this in year 2. Those are considered a little riskier, so you're going to have higher rates on loans of that nature. It oftentimes depends on the collateral as well. When there's real estate collateral to back up the loan, those are going to be on your lower loan rates as the 1.5 or so. The amortization term, as we just discussed, is 10 years to 25 years, or a mixed term depending on the usage of funds. This is also mostly depending on the collateral. If the collateral is real estate, it's going to be 25-year loan. If the collateral is equipment or goodwill, it's going to be your 10-year terms. If it's a mixture of both, it can be your mixed term. They're fully amortized, no balloon payments. Like I said, we went over that. You get time to find, a better loan if you feel like there's one out there for you. However, you're not forced to. They are all, well, actually, not all, but 90% of the time, the SBA loans are floating and they adjust quarterly. This is just the structure of SBA loans, and that's one of the distinct qualities of SBA loans. Most of them are floating and adjust quarterly. For your 10-year terms, there is no prepayment penalty, so you can pay it off anytime without a prepayment penalty. However, on your 25-year terms, those usually come in most cases with a 3-year prepayment penalty as 5% the first year, 3% the second year, and 1% the third year. This is, like I said, they can be used as a pretty good bridge loan, because in year 1 or year 2 you may not want to touch it, but year 3 it's a 1% prepayment penalty. If you feel like there's something out there better, feel free. And however, you don't have the balloon payment on that third year. You have the entire 25 years to actually find something better, or keep your loan, keep your current loan. The fees equal approximately 3% of the loan amount, and in most cases this is built into the loan, so this does not have to come out of the borrower's pocket, and it's built into the loan, and the calculations are already factored in. Now, as we move on to some examples of recently funded loans, we can look at some of these loans that have recently been done, so you can see a little bit of what I'm talking about and kind of get an idea of how flexible these loans are and what they can actually be used for. There was a bar and grill restaurant for $2.4 million. He was refinancing high interest rate credit cards. He bought some equipment. He used $150,000 of it to improve his property. I believe that was a patio. And then he used $50,000 for inventory that he was purchasing. And the inventory didn't even have to be all purchased at the same time. They kind of left that in a bucket for him to use at his will. There was a business acquisition for $3.1 million in Texas, and $1 million of that was actually for the commercial real estate. So here's what we talked about on the mixed term. Part of it was commercial real estate, and part of it was the business. So we were able to mix the term to 17 years, and he was very happy with that, because he had been quoted, some other terms to where his cash flow would have been much less on a monthly basis based off of their amortization that they were offering. We did a partner buyout for $288,000 in a California tire company. One owner was 25% owner of this company, and he wanted to buy out his other partner, and so he could be 100% owner of the company. We were able to get that done for him, and he was very happy with that. It's kind of a unique loan that we did, and I was very, very glad to be a part of. We did a franchise acquisition of an indoor adventure park for $2.5 million in Naperville. This included equipment, a lot of equipment that I've never heard of before. Yeah, it just seemed fun. I'd say, hey, is this real? Yes, it's a sky adventure theme where people jump off of it. Okay, great. They cost a lot of money also. Improvements to the property, there was working capital, and the closing costs were all built in. That's an example of just the multiple uses. This one, the uses for the indoor adventure park, I would not say those are common uses, but the flexibility to the program, and that's why I kept mentioning, whatever you can think there, you can think of a lot of things that we wouldn't think of over here to use an SBA loan for, but it actually can be used for that and actually does qualify. And pretty much wraps up the presentation. So if there's any questions, Ara, feel free.
Yep. I've been accumulating all the questions. I wanted to wait till the end. Thank you so much, Ryan, for putting that together. That was very, very informative. So I'm just going to go down and just start asking the questions, because we did have a lot of them come through. Let's see. The first one is, what is the difference between a 7A and a 504 loan?
The difference between a 7A and a 504 loan is that a 504 loan is used primarily for real estate. It cannot be used for something that is not associated with real estate. So a business, if you're purchasing just the business of a restaurant or a practice or something like that, you would not be able to utilize the 504. It would have to go SBA 7A. SBA 7A can be used for real estate, or a business, and it can be mixed. 504 would have to go strictly your real estate in most cases, and they have a little different terms. They can both be, 504 can be your floating or it can be fixed, and 504 you would have to utilize a third-party CDC in order to get that done along with the bank.
So if the underlying purchase is real estate, is there a difference between using a 7A and a 504? I mean, is there a benefit to one over the other? I understand one cannot be used for real estate, but if it's both, if the underlying is real estate, is there an advantage to either one of them?
I would say that the terms are similar. However, 504s can oftentimes have their 5-year fixed rates. So some people can use the 504. The 504s are going to be a little more limited to the uses. However, in some cases, they can have more favorable terms. The 7A is going to have a variety of uses that it can be used for, all coupled into one, and you're going to be able to get it done all through the 7A. Now, if there's some other parts of the 504 that don't fall within that area, then you're going to have to get funds somewhere else to complete the loan.
Okay. Okay. So moving on to the next question. What type of assets qualify for reserves? So if the bank's looking for the person to have reserves after the deal closes, what types of things qualify for that?
Well, they look into their checking account, their savings account. If they were to look at the IRA, some lenders would have to discount that to see if they would have to account for the fact that they may be penalized a certain percentage for taking out the IRA if they needed to use that for working capital or not. So they may be penalized, but some lenders can look at the IRA also as reserves. And a lot of times with the SBA 7A, we actually throw in working capital into the loan so that the borrower has reserves, so that they have that. And with the SBA financing, the 7A, we want the borrowers to thrive. We don't want them to just survive. We don't want to just give them enough just so that they're able to acquire the business. We want to have them able to thrive right off the bat. So we are able to throw in working capital a lot of times, and so the borrower can have extra reserves for those tough times.
Okay, that's very good. I think you already answered this question, but how long does it take to fund a loan?
Now, usually for an SBA loan, I would usually estimate 45 to 60 days to be safe. This can be done quicker. This is depending on how fast the borrower is able to get information back to you when requested, what's needed on the transaction, but usually 45 to 60 days is a pretty good estimate from when you get a letter of interest back and they say, okay, we're ready to move forward. Like I said, I have closed an SBA loan in 24 days, and there have been loans that have ran over the 60-day mark, depending on the loan. It varies from individual to individual.
Okay. I'm not sure how this question is, but like, what I guess it would be, what would you how would you advise someone who's, I guess, thinking about doing an SBA, but like to kind of get started? Like, what are some key things that they should know beforehand and in preparation of it? If I'm asking that question correctly, I think.
I'd say beforehand, one of the key things that I would tell people beforehand is if you're planning on getting an SBA loan, pay your taxes. So,
that's the only reason to pay your taxes?
Because a lot of times, when you're going into the SBA loan, you're going into ask for a loan, what the first things they'll ask is your personal financial statement, and then they'll ask for the tax returns, and the lender is often handcuffed to the tax returns. And they're going to have to go by, even whether it be the business is a lot of times when they're selling the business, purchasing the business, they're going to have some sort of appraisal, and it's going to go off of the income approach. The income approach is going to be based primarily off of what that business made for the last few years. That is going to go solely off of the business tax returns.
Mm-hmm.
So if their tax returns are looking good, and they may have wanted to pay a little more taxes than they wanted to, it's going to be very good for when they go to ask for a loan or even to sell the business. The other thing is have a good idea of what you want, not just what you think you need to, what you think you qualify for. You may think, oh, I only made this much money last year, or I only did this last year. That is not the case. I've done $1 million loans for people who on their tax returns made $17,000 last year.
How does that work?
There's add backs, and they may be acquiring a business that was very profitable. And that's what the basis of the loan is. It's a combination. Okay, what did this business make last year? And then if this individual had very little debt, then you can see, okay, we can make this loan, and they're still able to make these payments, and we like their industry experience. This is a good loan. They're not being drained on their end over here, and the business is already making money. They're capable of stepping into this business and running it. This is a good loan, and that's the case a lot of times. So ask what you want and what you feel you could thrive with, and then let the lender or the bank say, okay, we can give you this, because they may give you exactly what you want, but you don't want to get into the business and then still need something else. And neither does the bank. We want you to thrive. We want your business doing well. We don't want you to get into the business and then have to look for other sources of or loans to borrow more. So ask for what you want. Pay your taxes, and you should be pretty good.
All right. I'm going to throw this last question in there on my own, but you brought up the small business owners and especially closely held companies. Many of these people, they put a lot of personal expenses onto their corporate books. How do you, and they try to kind of manage their tax liability. How do you kind of factor that in, if at all?
Well, yeah, they're going to look at the financials, and a lot of times if the business owner, and we've had to reject some loans because they found that the business owner was just making bad decisions, and they're going, this isn't, the business isn't stable with the business owner acquiring these expenses, and if they keep doing this business isn't going to be here much longer. So they do look at the decisions that the owner is making. It's not just the money that is being made by the business, but everything is factored in and looked at on a broad basis. So that can be a positive and a negative, but it can be a positive for those that, I've saved many borrowers a lot of money, because when we were looking over the financials or looking over the profit and loss statements, I was able to point out, hey, the profit and loss statements don't match up with their tax returns. Have you spoken with them about this? And when they go have that conversation, they find out that the purchase that they're buying or the property didn't make the money that they said they did, and it's about worth a lot less than they're actually in contract for.
Wow. Okay. So bottom line, have good financial statements and pay your taxes.
Yes, I believe you'll be able to help them out with that. All right.
Yes, absolutely. Well, Ryan, why don't we move on to the next slide, so that way people have your contact information. And I think the first step in this is to just reach out to you and get the conversation started and just see where you're at. And if you're looking for a small business loan, the SBA and Mission Valley Bank can definitely assist you in that process. Just get the conversation started. Reach out to Ryan and see what we can do for you. Right?
Absolutely. Thank you, Ara.
Thank you, Ryan. I really appreciate it. Any other closing thoughts before we conclude the webinar?
You were talking about the financial statements. It really is a big help. I know your company is able to step in and help with that, but it really is a big help and helps the process go smoother when the financial statements are in line and the financial statements are organized. So would suggest that people do reach out and contact you to get their financials in order, and it would help the process move along a lot faster.
Yeah, I agree. I say that kind of tongue in cheek because sometimes we look at financial statements and we wonder what they actually are and how the people even derive those numbers. So
Yeah,
I understand. Well, thank you again, Ryan. This was really, really informative. And as we mentioned earlier, this is being recorded. If we did not answer your question or if you have additional questions, please feel free to contact either one of us or reach out to us on the social media platforms where these will be posted. Thanks again, Ryan. Have a great day.
Thank you. You too.